You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Welcome to Volatility Views, the premier program for volatility traders. Each week, we'll take a deep dive into the world of volatility with in-depth analysis, trading activity reviews, strategy breakdowns, cutting-edge education, and much more. We'll also bring you exclusive conversations with the traders, researchers, and asset managers who are reshaping the volatility landscape. If it involves volatility, then you'll find it on Volatility Views. Volatility Views is brought to you by NASDAQ. From its inception, NASDAQ has been an innovator and agent of change in the financial markets. It's in our DNA, from the development of electronic trading to our drive to bring enhanced functionality and world-leading technology to our suite of 6 options exchanges. We exemplify customer focus, consistent technology, and streamlined solutions. Now NASDAQ is proud to launch the NASDAQ 100 Volatility Index, ticker symbol VOLQ, to its suite of exchange indexes. VOLQ uses only at-the-money options to provide a precise measure of NASDAQ 100 volatility. Learn more about this exciting new volatility product at www.nasdaq.com/VOLQ. NASDAQ, leading the U.S. options market and continually rewriting tomorrow. And now, it's time to take a deep dive into the world of volatility. It's time for Volatility Views.
All right, everybody. That music means we are back once again with Volatility Views, the premier program for volatility traders. My name, of course, Mark Longo from theoptionsinsider.com. as well as from the network upon which so many of you folks are just mainlining these days. If I sound a little bit back to normal, it's because I'm back in the Chicago studio after a fun week down at the FIA conference there in sunny Boca. Only a mild 70-degree temperature difference. I left, it was about 20, and I landed in Boca, and it was about, 90. Good week for cruising around with the top down a little bit. Can't do that in Chicago right now. So fun things abound. A lot of interesting people that we're going to hopefully bring on the network for you folks down the line. So a lot of fun to be had. But now we're back in the studio, ready to get back at it. Hopefully you're ready to talk some volatility. Remember, if you do like what you hear, this show, anything else you hear on the network, do leave a rating on your platform of choice. It does help new people continue. It's hard to believe there are new people after 16 years. But yes, they are out there, and they are legion. And they are discovering the shows all the time. If you'd like to continue that process, leave a review on your platform of choice. And of course, if you want more living, more content, more goodness, more vol goodness in your life, and who doesn't? Then check out theoptionsinsider.com/pro. I have to say, of all the topics we discuss in the pro Q&As, volatility has to be probably the most overrepresented. So if you like vol, then you're going to love the pro Q&A sessions. Of course, we get into a lot of fun business on options oddities. So if you don't want your broadcast week to end with volatility views, you want to keep party rocking into the weekend, then join up over there, theoptionsinsider.com/pro. You get options oddities after this. You get the giveaways. You get live access. You can heckle us during the show, ask questions, all sorts of fun and more. Theoptionsinsider.com/pro is the place to go as we go around the horn, see who's joining us on the old Volatility Views program today. First, let's go out to the dark, the stormy, some might say terrifying, some might say, what sane person would live on the dark and stormy shores of Maine? Allow me to present you the one person who does. He is the rock lobster himself, Mr. Andrew GIOVINAZZI from OptionPit.com. Mr. G, welcome back to the show. How go the dark and stormy shores, sir?
Did you enjoy your sojourn down to Florida?
I did.
To drink frosty beverages?
I did. I was cruising around in a convertible, 90 degrees. It was much better than 20 and sleeting.
There's a reason I think people move to Florida. Anyway, the dark and stormy shores are a little cloudy and stormy today. I'm expecting some clam pirates this weekend as we're having slightly milder temperatures and the ice packs are gone. So we are well on our way to spring here in the dark and stormy shores.
Hasn't quite sprung here yet in Chicago. Usually around St. Patrick's Day is usually when we start to see the first rays of sunshine, the first tastes of warm weather. Not quite there yet, but hey, you know, every winter is a beast unto itself. So we shall see. But you know what? Warming things up over here on the old NASDAQ hot seat, we have another twofer piling in for your volatility education, information, and perhaps, dare I say it, entertainment. First, joining us once again, the streak continues, Mr. Kevin DAVITT, the head of NASDAQ Index Options Content. Kevin, welcome back to Volatility Views, sir.
Mark, thank you for having me back. I'm on the shores of a bright and, as you mentioned, chilly Lake Michigan. And, you know, there is a joke, Andrew, about why people go to Florida, but it's probably inappropriate. They call it, the God's waiting room. Looking forward to this week.
Especially Boca, that area, shall we say, overrepresented in that category. Just going to say that out there. And then also joining us, squeezing in, moving Kevin a little bit aside there because he's got to squeeze in next to him on the NASDAQ hot seat, our old friend, Mr. Jim Carroll, the Senior Vice President and Portfolio Manager at TOROSO Advisors, joining us from a parking lot near you. Mr. Jim, welcome back to the show, sir.
Thank you, Mark. It's always good to be here. It's kind of weird been here last Friday, but I'll take this Friday.
Yeah, that was a banger last week.
Going on.
That was a bit of a banger last week. You got a decent one this week as well. And don't feel bad. Many great episodes of Volatility Views have been recorded from parking lots around these great, fine United States. So we shall continue the tradition as we head right on into the Volatility Review.
It's time to break down the latest developments in the volatility trading world. It's time for the Volatility Review.
All right, everybody, welcome to the Volatility Review, the portion of the show where we do just that. We break down the week that was and indeed still is, from about trading and trending and analysis and all sorts of fun perspectives. And I was just joking there at the intro, but I have to think back on the decade-plus run of Volatility Views. And I have to say this show, probably on the network of all of them, has been recorded from some of the most interesting places. Of course, multiple parking lots. A Disney World, I've done episodes from down there in the parks proper. Moving trains, all sorts of fun has been had on the Volatility Views program over the years. So lots of fun to be had today. Before we get there, let's break down what's going on out there in the markets. And it seems like maybe things are starting to turn. We shall see. We are still a long way from even or flat on the day. As we're kicking things off, listeners, the markets are still firmly in the grips of the red. Just yesterday, it seemed like maybe we were going to rally this thing a little bit. Got back up to 39.5 or in that range in the S&P. Maybe people were starting to move past these contagion fears. Credit Suisse, all this madness popping off this week. As you recall, as Jim mentioned on the show last week, we were all kind of waiting with bated breath for the weekend. We were in the teeth of the sell-off, a 2-day sell-off at that point. And as we've seen in the past, if you get that third day, that Monday, if you open up really aggressively down on that Monday, that's when things really start to fall out of bed. People start panicking, and we really see the aggressive downside moves. We didn't quite see that. The regulators stepped in, tried to make things a little bit less painful out there on the banking front. That seemed to allay some fears. Then, of course, throughout the week, we had more names being added to the list of banks feeling the contagion risk out there, and that started to spook more people, including names that are familiar to listeners of this show, like Credit Suisse. They, of course, had TVIX for many years and have been players in the vol space for a long time. They got added to that list this week. That spooked a lot of people, and we saw a lot of sell-offs. Yesterday, we tried to rally off the heels of that. Coming in today, seems like folks are once again spooked. S&P off not quite a full percent, even though it was earlier this morning, about 0.9%, I would say. We have rebounded off the lows. We were at about 39.10 or so this morning, at about 39.25 or so right now. So the S&P has rallied a little bit. Same for the Dow, off about 0.9% as well. And the NASDAQ only off about a little over 0.5%. So we shall see if this is the beginning of the warm turning and we end the day green, or this is the head fake and then we close another 50 points below where we are right now in the S&P. Only time will tell, listeners. That means kicking off the show here, we have our vol products. Again, it kind of depends where you look. Mostly not that distant from where we were this time a week ago, except for some. I'll get that in a second. You'll see exactly what I'm talking about. VIX itself, when we kicked off the show, just a wee bit shy of 24.90 when we kicked off the show. That's up only about 0.4 of a point. So not a huge move net on the week, even though in between we did a lot of living, obviously. VVIX, though, this is where things get interesting. The vol itself. Remember, I said, listeners, not too long ago on this show, once it kisses the 75, you got to really sit up and start paying attention because it doesn't tend to hang out there that long. Now, that said, I never saw a pretty much 50-point rally in VVIX in the span of a couple of weeks, but that's what we've seen. It was up 25 points last week. It's up another 22 this week. So it shot up to 100 last week. It's 122 when we kicked off the show this week. So this might be the record for the fastest vol has gone from 0 to 60 that I can remember since we've been doing this show. Usually it'll get up to an 80, 85, maybe something, not 122. But hey, we are living in interesting times, the old Chinese curse / blessing. And then, of course, a VOLQ 25.75 when we kicked off the show, down about 1.5 points from last week. So again, kind of a bit of a mixed bag across the vol space, but intriguing stuff nonetheless. Let's go around the horn the opposite of the way we started. Let's go out to the NASDAQ hot seat. Let's start with Mr. Jim in a parking lot near you. Mr. Jim, first off, you said you regretted not being on the show last week. So if you have some thoughts you want to share about the madness that was last week, have at it. And then B, what's catching your eye in another week of contagion fears?
And then suggest that, we came out of 2022 with everybody bitching and moaning that the VIX was broken. It just didn't respond to anything going on.
Last week kind of put the lie to that, huh?
Certainly did. And, and we've continued to see, responsiveness. You talked about the VVIX and just, the vol of all the ups and downs. I try to kind of normalize how the VIX moves. We're not supposed to take percentages of percentages, but if you just take vol points out of the VIX and compare them to percentage changes in SPX, we're definitely seeing the responsiveness come back. There's all the chatter's been about zero DTE options, and it certainly seems like people have decided they need to scramble for something with a little more duration than zero.
What else is there, Jim? The whole world is nothing but 0 day now. I didn't know. Are there any other contracts even listed beyond a day? Could I go out, let's say 2 days? Is that possible?
Well, I probably need to confer with Russell Rhodes on whether he has changed his mind about the theoretical low value for VIX, because maybe if none of those options trade at all, we could get to zero.
Yeah, that's been a long-standing talking point going back many years on this show. What is the basic inertia level of VIX? Like, how low can it go? And I think we've always come down somewhere around a 5, I think. Yeah, maybe, who knows? Maybe we can get to zero if nobody touches a 0 day contract out there. So intriguing stuff. And nonetheless, I'm curious, Russell's not on, but you're also a longtime watcher of vol from a historical perspective. Of course, you put out that great vol 2022 analysis. If you haven't checked it out, if you have made it available to the public, Jim, I encourage you listeners, hit them up over there at VIXologist. Check it out. It's a great read. From your perspective, I'm kind of putting you on the spot, but I kind of mentioned earlier, I haven't, it's been a while since I've seen vol respond this quickly. Maybe ever since we've been doing the show. Can you recall off the top of your head another period where vol had this aggressive of a move in just a span of like a week or two?
That's a fair question, and I should have a concise answer. I didn't go back and check the numbers for sort of rate of change over, a short period of time, but, it was definitely a face ripper. And, you could certainly see it in the VIX options chain as well. Calls were definitely heavily bid.
Yeah, the short answers are probably going to be obviously Volmageddon in 2018, maybe March of 2020, but I haven't crunched the numbers to see that for certain. So those could certainly be the outliers you might point to, but intriguing stuff nonetheless. We are certainly, regardless of how many other times it's happened, we are certainly hanging out in a rarefied vol of vol move time right now. Kevin, same question for you. First off, we missed you down in the sunny environs of Boca. You got to scam that invite next year, sir. It was 90 degrees down there. And then B, when you weren't missing Boca, what were you catching your eye out there in the vol space this week, sir?
Yeah, you need a higher pay grade, I think, than I'm currently at to end up at Boca, but I'm glad you enjoyed it. So to your question, what's catching my eye this week? I have to point out that we have our March quarterly expiration, roughly $3 trillion in notional exposure. Part of that came off this morning in the form of index options, and part of that will come off this afternoon in the form of single name and ETF options. I would point out that, as has been the case for the better part of the past year, where the narrative has moved from single name to much more macro, index volumes on a year-over-year basis are higher. Single name option volumes are lower in terms of what's coming off this expiration. And then big picture, what catches my eye at the end of this week is that the Fed kind of effectively reversed half of the quantitative tightening that they've done over the course of the past 9 months to a year. So their balance sheet was reduced by a little bit over $600 billion since March of last year, when they stopped buying mortgage-backed securities monthly, by this bank term funding facility. And that pumped right around $300 billion back into the system. So you talk about easier financial conditions. And is that where the worm turns bigger picture and we're sort of back in that don't fight the Fed because they're stealthily easing? I don't know, but that remains to be seen.
You bring up a good point. This is, quad witching. This is normally, in a normal market, we would be talking about this, right? This would be an interesting data point, and yet that has gotten completely lost in the shuffle with all the other fears of contagion and everything else going on. No one's talking about all the quad witching, which, again, usually just captivates the markets and your CNBCs and everything else on a day like today. I think they just like saying quad witching. It sounds cool. It sounds ominous. But again, that's just a data point that's getting lost in the shuffle of all the other madness going on out there today. All right, last but not least, not beaming in from a parking lot. I don't know. Do they have a lot of parking lots on the shores of Maine? I guess we'll find out. Mr. Rock Lobster, sir, what is catching your eye in another week of madness on the vol front?
A pretty interesting. I'm looking at. I feel like today the vol feels a little more bid than the market is down as far as like VIX vol goes. So as I look at this, let's see here. I think the VIX cash is down a little bit, and a little bit of the bid has come off the call spreads. So, I mean, let's see what happened this week. Let's review. Yellen strong arms banks to prop up. What is it? First Republic, the New York bank, whatever that one was. By giving them $30 billion in deposits. We effectively have Credit Suisse is now is half the size in assets or whatever, or the bailout of the whole Swiss gross domestic product, I think. So now the whole Swiss economy, or half of it, is helping prop up a company that is poorly run with a $7 billion market cap. Now, I don't know about you, but is this really the best use of money? I don't know. I'm kind of going with Kevin here that this, the Fed sort of just QE'd hugely without actually saying they're going to do it. Now, once again, who is the cause of all these problems? problems. Let's review that from a vol point of view. As the government wants to do, they try to fix the last crisis with new policy, which we all know never works. And a lot of the problems, our banks were forced to hold a certain amount of high quality securities, which of course, if you have mark-to-market accounting, nothing is a high-quality security anymore. If you move rates up 500 basis points in a year. And so what is that? 7% of their books are all stuck with that crap. Again, most of it will be redeemed at par, but if you're going to market to market, that's just, we all know that causes huge problems. I'm not sure mark-to-market accounting really helped when it comes to bonds. I know that they used to write down the value of bonds when they were going to default, but just writing down stuff going to par, I'm still not sure that's the best idea, especially if you're forced to use it as capital. So anyway, the Fed helped cause this by probably keeping monetary policy too loose for 10 years. And then, of course, the government still has their head in their behind because they won't stop spending. So we have multiple problems. Once again, money going to, I think, just dumb places, propping up institutions that probably, I don't even know why Credit Suisse exists anymore, to be quite honest. It's like a useless bank. They're terrible. They've been fined tons of money. And I don't know, for all the talented people there, I don't know what the heck they're doing. So from a vol point of view, right? So the rest of the economy, let's say the Q stocks, for instance, went straight up. All of a sudden, a pristine balance sheet started looking good to investors about a week ago. Microsoft was up $40 in 5 trading days. So these days, money moves so fast to another sector, I think it kind of blows my mind a little bit. And from a vol point of view, we touched 30 twice. It's been a while since we've done that. Both days, once we peaked at 30, vol was down to 24. Again, to me, 30, we talked about this yesterday, 24 vol, 24 and up is our top quartile for VIX, about 25% of the time historically. Once you see a 30, though, you start to smell a little systemic issue, like something bigger is afoot. And we did hit it twice now, and then we came back to sub 24 twice. So the market is definitely leaning heavily on, and this is one of those things where the Fed is making money available, but they haven't really used it yet. Again, and I think that's why. But who knows? Again, we now have to go back under the 2008 terminology. And you might remember him, Joe, from he was Dean Witterbrook. I don't want to use his last name, but it's like nobody knows what's under everybody's skirt. That's the problem. What bank is going to do what next? And, all I heard was stress test this and stress test that. Did they test the fact that rates could go up? I don't know.
That seems like the first thing to do when you're buying billions of dollars worth of 10 years, right?
Well, they just stressed defaulting on MBS securities, but they didn't stress the fact that treasuries can move, the interest rates.
Pay no attention to the billions of dollars of treasuries behind the curtain there.
So, and again, I don't know that, right? Because I did not see like the stress test, whatever the heck they did. All I know is I can remember NASDAQ regulators going down like many moons ago, from not from the exchange, but from FINRA, right? Coming down, and I was just showing them Instinet, and I was saying, you see how my bid's up there, and the stock is trading below my bid. This was in the early 90s, right? This is in the Bernie Madoff Wild West days when he made all his money, right? So. And the guy would look at this like, well, how does that happen? Like the fact that it could trade through my bid by like a quarter and I don't get filled? That's an excellent question. You guys should figure that out. So anyway, what I would say is, yes, there is regulation. What are they regulating? So we still have this problem like every 10 years, stuff just builds up in the system and then it's a mess again. So is the volatility warranted out of 24? I mean, we talked about like 75 vol. I told you, bought all the strangles I could buy, reasonably, in VIX. It was ridiculous how low the vol got. I mean, really, considering what was going on. But remember how, and this is just for listen, like how does vol trade? How it does? If the market is moving up and down 1% a day, or 2% a day, or 1.5% a day, the VIX is going to be stuck at 24. Right? So VIX isn't moving, but the market's moving, but it's priced properly for what's going on. So you always got to think, quite well about that. Like, what are you pricing? VIX isn't broken if the market's moving like that. And clearly, it moves when all of a sudden you start breaking out of those 1.5% ranges again, and you're looking at, again, the bottom, like VIX blows up when 3,000 SPX becomes a possibility. And that's when we got above 30, and it only lasted for a few minutes. So, my sense is because most of the banking problem is because they own high quality securities and they're getting hosed on the mark to market. I think that should be a dealable problem. If there's anything else besides that, then that's a more difficult problem. Why Credit Suisse needs $50 billion, I've got no idea. Maybe they just loaded up on treasuries and, they over leveraged on treasuries and they lost. But anyway, and that's what we have. So the big question is, what does the Fed keep their 20, do they do QE and then raise 25 by 25 basis points? Or do they finally stop and say, well, since we started to break things, literally banks are going broke, why don't we see what could happen? So I think there's a reasonable amount of uncertainty around this, what's going on here, what the Wednesday FOMC meeting is going to be. So I don't know, but it would be odd if they did the QE and then they just raised again, because then that to me is kind of stupid, right? Like, why do that? Why just admit that we broke some stuff? Hey, declare some victory and see if you can fix the problem now. So, I think that's also part of the volatility. Once again, if they fix everything, then we're like 4,000 and above again in a heartbeat, right? Which is a good reason for vol to be relatively high. Look at the Qs, because money has no problem buying an equity when they think the danger is over, so to speak. So anyway, that's kind of how I see it, and I still see some basically up and downside vol for the next week at least.
You brought up quite a few points there. Hard to know where to start, but in your absence last week, Andrew, we did talk about your idea that you advocated for 2 weeks ago with vol significantly lower. We referenced that as making a whole lot of sense, and that's a plug. You got to tune in every week to get those kind of tidbits. And then bigger picture, I think one of the points you made is how quickly risk gets repriced in the current market. I would argue that that's largely a sign of how efficient the equity and vol markets are these days. I suppose you could argue otherwise, but you need to be nimble, particularly if you are trading in vol markets, because those moves up and down can happen very quickly. And if you don't monetize, you can be kicking yourself.
A lot to unpack there. Yeah, the vol trade certainly did work out there. So dinner's on Andrew next time he's back in town here in Chi-Town. As we keep on rolling here, let's get on out to the volatility surface, a place I know Jim knows very well, a place where he hangs out when he's not hanging out in a parking lot near you. And what we're looking at out there right now, listeners, is obviously the curve has shifted up 0.5 to 0.75 of a point, kind of depending where you're looking. And that front portion of the curve, no different. We're seeing that April future up about almost exactly 0.5 point. The March future actually a bit of a laggard, only up about 0.25 of a point, but intriguing stuff nonetheless. Mr. Jim, sir, what's catching your eye out there in the volatility surface this week?
Well, two things. It was 2 or 3 days ago, I tweeted out the old alligator jaws on the vol term structure, because the front end had definitely lifted and separated from the day prior. But, what we've seen for sure is that even on days when the equity markets are rebounding a little bit, the term structure has stayed flat as a pancake. You could stick the whole thing inside of 2 points from front to back. And to me, that just says that, nobody is willing to take the bet that we've seen the worst. And so let's go short the crap out of VIX futures. Because, 2 things. One, the comment that you need to be nimble. If you caught this thing early on Thursday and rode it hard, to the highs highs for VIX on Friday, you made some nice change. If you were bold enough to hold it over the weekend, you had an opportunity to make even a little more. But, this week, that trade on either side has just gotten chopped up. So right now, I think you probably have a lot of people just saying, okay, either I made some money or I missed my chance, but now is not the time to be brave. So while the curve is basically flat to slightly backward, maybe I'm just going to hang out and wait for what I perceive to be as a better opportunity in either direction.
Kevin, anything catching your eye out there in the volatility surface this week, sir?
So I really don't disagree with much of what Jim said, but I do tend to be a devil's advocate, and I wonder when you would argue the time to be brave would be. Now, we, like Andrew pointed out, things are starting to break. And we did see the biggest move, as is typically the case in the front 2 months of the vol term structure. And we did see an inversion that continues to move back toward flat. Curious, you got March futures coming off the board this Wednesday, right? If that got to a couple bucks over on Monday, are you willing to lean into that? Or what would you look at if you go out to March, June, and I'm sorry, April, May, and that part of the term structure inverts by a couple bucks? Like, is that what you're looking for, Jim, in terms of being short vol?
Yes, I think that's more. But I think it's also really just, we've had an up day, down day, after several down days. And so whenever you think maybe things have calmed down, they get nasty again. So I think part of it, at least from my perspective, is also just letting things settle out a little bit. There's a term of art that I like to use called the second mouse. The first mouse doesn't always get the cheese, but the second mouse has a better chance. And I tend to be, a second mouse trader, if you will. I'm happy if the first mouse is successful and grabs the cheese and gets away from the trap. Great kudos to the first mouse, but that's not how I'm going to go. I'm going to give it a chance to settle out, give the term structure a chance to begin to head back to contango, because that trade tends to have longer duration and plenty of profitability if you can be disciplined and patient. I think there's a great opportunity in here for people to just get chopped up, spit out, and frustrated.
I like the way you put that with the first and second mouse. When I was younger, mouse. When I was younger, I would probably try to be that brave first mouse, and it only takes a couple of times to get caught in that trap. And you do it like kind of one of the other sayings in that vein is, your early is akin to wrong. You're early and sized improperly on something like that, and you could be out of a job or in a significant P&L hole. So good point on letting this first wave play out and then reassessing. I like it.
And an added bonus, I think Jim just gave us our show title, Chopped Up, Spit Out, and Frustrated. I would click on that show. I would listen to that. Mr. Rock Lobster, are you chopped up, spit out, and frustrated? I'm thinking you're not because you're still sitting on your ill-gotten gains from your vol. But what else is catching your eye out there in the vol service this week, sir?
Yeah, I mean, for the most part, things are good. Of course, the equity portfolio does not look as rosy as it did.
You know, you're just nothing 100% Microsoft. That's looking pretty good right now.
I was about to say, I wish I was that smart. I guess everything is all AI now. Anything ridiculous. Of course, the AI stock that I have the most shares in, which is Palantir, is it looked really good this year at $10.
That one had it had a brief shining moment in the sun. I was going to ask you about that oddities if you managed.
I did. I was finally green. I
figured you were happy for a minute, yeah.
and then they took it all away and slapped me. So, I think it will be okay. But anyway, as far as the vol curve goes, this is and I like Jim's when he does his tweets. This is the I don't freaking know what's going on vol curve, in my view, because I think the flatter it is, the more uncertain of VIX direction, and as in up or down. So, but normally when the curve's pretty flat, just from observation for me, I have zero data on this, but it seems to work. That you usually are going to get like a 3 to 4 point, like between 3 and 4 point move within a week. Once we flatten again, we've seen that twice already this week. So if you're using that as a barometer over the last, let's say 8 days, it looks pretty good. Because I think we've actually had up 4, down 4, up 4, down 4. So that's been a little bit nutty. So again, and most of that is just a shape of like all the forward vols are the same. And the market's like, hey, we don't know what's going on. We're just going to take the vol up everywhere. The vol is going to be a little more in the front and carry on. So that's, so there's an actual real vol underneath that flatness and why it is. The thing I find odd now is that flatness used to occur in the pre-COVID days. I think we're still in this COVID basically, and I think really it's like a Fed-induced nightmare with all the liquidity they poured in. It's like bizarro land. And it's going to take a while for us to extricate ourselves, unfortunately. But the old days, like we used to get flat at 18. We're getting flat at 25. So it's just as an observer of this dopey curve, I guess people have a full life, and I just look at a VIX curve all freaking day long. That we're flatter at higher levels because like in the old days, 24 VIX, we'd actually be seriously backward because the thought was that move would be relatively quick and then things would be kind of calm again. So the flatter we get, the higher we get, the longer the uncertainty I feel the market is pricing. And it rightly so, right? You're throwing another how many trillions, I think, Kevin, like a crazy number at this problem, and and theoretically it has been solved because there's only a couple banks that went down. So they're trying very hard to keep, I guess, everybody taking deposits out of one bank in another. And my guess is like most Main Street people are like, and I've gotten a couple of texts from people like, "What's going on?" I'm like, well, if you got less than 250 in the bank, don't worry about it. Although that is a significant amount of money for the government to come up with on short notice. So that's why the vol curve is. So I think the flatter the curve, the more unstable VIX cash is, because the traders are willing to just, they're going to pound that down to the low 20s as fast as they can if the crisis is over, because that's what traders do, right? Why keep the vol? Why keep that 30-day straddle at $240 when it should be $200? So, remember, all there's always a pricing reason for the pricing in VIX. But as of right now, like, wow, yeah, you could, if the Fed stops raising and they're like, okay, we're declaring things broken for the short term, you could make a case for 4,100 in a 8 or 9 trading days, because everybody be so damn happy. I mean, look at what the Qs did. They're almost at year highs again. And what, the banks are going broke? So there is funk galore out there, but that also makes VIX, I think, more volatile. The VIX cash level more volatile than normal because you got all these sort of very like the outliers are going in both directions. Qs to the moon on security or perceived flight to quality, and on the other side you got everybody. JP Morgan's down 20% for the year, something like that. Bank and all those good banks are getting kind of smoked. So I didn't think anybody was going to pay like 30 times earnings for Microsoft and think that's a deal, and then sell bank into the hole again. I didn't see that one coming this year, but hey, it's a market. So, but that's what we have. I mean, you would think that would be kind of a good trade eventually, right? Buy the banks, like buy some calls on XLF and buy some puts in the Q, and it should work eventually. But as Kevin said, you might be wearing that trade for a week, might not be very comfortable.
Yeah,
as the market keeps going the other way.
Riffing on some of your intra-market or intra-vol ideas, I was screwing around with some numbers this week, and I was looking at VXN. So VIX methodology applied to the NASDAQ 100 versus VIX. So I'm talking index to index here. And in percentage terms, VXN looks cheap relative to VIX at these levels, like came back into roughly a 10% premium relative to VIX. The point that Andrew made about the performance of the NASDAQ 100 relative to the S&P 500, it has significantly outperformed this year. I will point out from a composition standpoint that financials are excluded from the NASDAQ 100. And I would say that has almost certainly played a role in that outperformance more recently. Typically, based on this spread between 30-day forward or expected volatility in the NASDAQ 100 relative to the S&P 500, typically you see this spread narrow on sell-offs. But what you see when you look out across the surface is that flat vol curve. And I agree with both Andrew and Jim that is indicative of uncertainty and not something that I would want to run into a potentially burning building.
We got to keep rolling with the show here. Man, we've been having so much fun talking about the madness that's been the last couple of weeks, and who can blame us? There has been a lot of madness. We haven't even gotten into the vol products. Let's start banging them out now, listeners. First, out to the land of VOLQ, a.k.a. the at-the-money vol of the NASDAQ 100. No skew here, just the facts, ma'am. VOLQ, let's do a quick top 5 out there. VOLQ options. Number 5, we got the March 25 puts. Number 4, the March 24 puts right behind them. Number 3, the March 24 calls. Somebody likes that 24 strike in VOLQ. Number 2, we got the March 22s. And number 1, still holding down the top spot, the March 18. Somebody likes that in-the-money goodness out there in VOLQ. You think they would have taken some of that off by now, but apparently not. Let's go on out to the land of VIX options now. And today, surprisingly, maybe a bit of the laggard of the bunch of the week. I mean, normally I'd see, closing in on 550,000 contracts. That's a banger day. And you'd be correct. But looking at the ADV now, listeners, it's back up. It's back up over 800,000. It's up to 818,000 now. It's up 175,000 contracts just from our show last week. That shows you what a banger week it was for VIX volume. Before we get there really quickly, let's break down the top 10. If you were waiting for your moment for maybe some more put action, well, then maybe we got you covered, because for weeks it was 10 calls, no puts. Then we had for a little while there 1 put sneaking into the top 10. And this week, can you believe it? 2 puts, a whole 2, making their way into the top 10 this week. Let's see if you could spot them. We'll play a little Where's Waldo together, listeners. Number 10 cost you 165,000 contracts to break into the VIX top 10 this week. That's decently frothy, all things considered. That gets you to the March 80s. I love when the March 80s are just kicking us off. Shows you what kind of fun we have in store for us. Number 9, $1.69 of the March 40s. Then we find our first of 2 puts, listeners. Number 8, 182,000 of the March 20 puts. Right behind it, number 7, 189,000 of the March 18 puts. And then that's it. That's all your put action for the rest of the top 10. Number 6, 195,000 of the March 26s. Number 5, 218,000 of the May 50s. Our old friend, Mr. 50 Cent, looks like he didn't take the bait when VIX started kissing 30. He said, nope, I'm going to hang on. If that is our old friend 50 Cent, if past his prologue, he's been pretty deft at taking this stuff off. He waits until kind of the last moment. So VIX just kissing 30, that's not going to do it for him. He's waiting for that blow up. He's waiting for that explosion to the upside. If that is our friend, when they start taking off the May 50s, then perhaps you know it's safe to get out of the pool. Number 4, 229,000 of the March 30s. Number 3, 249,000 of the March 75s, right back up there, listeners. And then number 1 and number 2, you know what they are. Number 2, 396,000 of the June 40s. Number 1, 399,000 of the June 30s. Mr. Jim, I saw you tweeting this week about this June 30-40 vertical. Got into a whole fun discussion about the merits of this trade nor lack thereof. Are you a fan of this? Are you a fan of this approach to getting a little bit of long-term vol exposure, just loading up on a ton of June 30-40s? Because I'll say your compatriot, Mr. Rhodes, there, not a fan, and he had a pretty epic rant to this exact trade on the show a few weeks ago, sir.
Yeah, I talked to Russell about it a little bit this past week. He's still recuperating from his scooter accident, but I got him a little agitated just even talking about it. Look, Andrew, Kevin, you have better insights into who these characters might be pulling off these trades. A 30-40 call spread in VIX, sitting where we sit and saying, if you rewind to last week, was there some money to be made? Is it a pure options trade? Is it a hedge on an equity book? How fast are they on the trigger? These are all things that, I don't know. But given what we've just been through, it sort of feels like, somebody should have made some money on that trade. So what do I know?
All things being equal, they should be happier right now. But again, you don't know what they have on against it. All sorts of fun lurking. Speaking of fun, let's get out there really quickly because we're coming up against it, listeners. And we have just a tsunami of VIX paper to get to. Today, like we said, kind of the laggard of the week. 542,000 contracts on the tape. The big dog today, 40,000 of the March 27s, followed by 40,000 as well of the March 22 puts. Number 3, 34,000 of the March 20 puts. Number 4, 33,000 of the March 24 puts. And rounding out the top 5 today, 26,000 of the March 30s. I'm just going to kind of bang these out, listeners. So strap in. We're going fast. Thursday, 885,000 contracts on the tape. So kissing a million, not quite. The big dog yesterday, 58,000 of the March 23 puts, followed by 52,000 for number 2 of the March 24 puts. Number 3, 41,000 on the March 30s. Number 4, 39,000 of the March 22 puts. And rounding out the top 5 yesterday, 30,000 of the April 20 puts. Wednesday, the big dog of the week, at least so far, 1.65 million contracts on the tape. Now we're talking some paper, listeners. The big dog on a very active Wednesday, 74, almost 75,000 of the March 30s. They weren't unwinding, clearly. They probably added on to some of this 30 love out there. Number 2, 65,000 of the April 19 puts. Number 3, 60,000 of the March 23 puts. Number 4, 50, almost 51,000 of the April 60s. Right back at it, listeners. And number 5, 43,000 of the March 28s. Tuesday, no slouch, 1.1 million contracts on the tape. Tuesday, the big dog on Tuesday, 86,000 of the April 19 puts, followed by number 2, 61,000 of the March 25s, 59,000 for number 3 of the March 30s. Number 4, 51,000 of the March 22 puts. And rounding out the top 5 on Tuesday, 45,000 of the March 35s. Flip back to Monday. That was the day. A lot of hand wringing going on during the weekend. How would we open on Monday? Would we see the next leg down? Would this really be just the signal for the next leg of downside in the market? Turns out the answer was no, but a lot of volume going up Monday nonetheless. 1.42 million contracts on the tape. So you're talking 3 days over 1 million contracts this week, listeners, and VIX. That is nothing to sneeze at. The big dog on a very active Monday, 66,000 of the March 26s, followed by 62,000 for the March 30s. Number 2, number 3, 61,000 of the March 75s. So right back at it, listeners. Number 4, 60,000 on the March 25s. And rounding out the top 5 on an active Monday, 58,000 of the March 22 puts. We're coming up against this. I'm going to try to bang out some of these other products really quickly. SVIX this week, 14 even, kicking off the show. Still hanging out at about a 14, up about half a point. Today, doing about 700 contracts on the tape. The ADV, though, ticking up about 400 contracts. The ADV is now 1,400 contracts. By the way, I take back some of my criticism of SVIX. Turns out if I get a week, I can go hang out and just go to a conference and relax a bit. I can do some fun trading. I have time and I'm not talking on the microphone to you folks to put up some trades. And I was able to get some trades off more than I thought in SVIX at pretty decent levels, even multi-leg strategies like flies. And I was working some pretty aggressive levels. I did not think people were going to step up and fill me in the middle or below in these 70, 80 cent wide markets, but they were. That kind of surprised me. So maybe if you're a little bit intimidated by the markets out there in SVIX, you don't want to dip your toe in the water, don't want to drop your hook out there and see what you can get, give it a try. You might be surprised. This ADV is ticking up. Maybe things are getting a little bit better. I mean, on surface, the markets are still terrifying. But if you dive in there, you may be surprised. I certainly was surprised at the levels I was getting off out there. So intriguing stuff out there. UVIX this week, 2410, down a whopping 2.2 points. Today, a little bit of paper on the tape. There was closing in on 5,000 contracts out there. Let's see how it's looking right now. A little bit over that now. 53, almost 5,400 contracts on the tape. The ADV, 7,000. So it's up 2,500. So the ADV starting to grow. Maybe this is the first leg of UVIX inevitably catching everyone else's favorite friend out there, which is, of course, UVXY. Speaking of UVXY, at a 6.25 when we kicked off the show, up about a quarter. Let's see where it's hanging out right now. Still about 6.25. In terms of paper, 254,000. So already over 250,000 contracts on the tape. So UVIX still has a long way to go to catch up to UVXY. The ADV out there, 246,000 contracts, up a whopping 61,000 from this time last week. So folks loving themselves some UVXY. Mr. Rock Lobster, really quickly, anything catching your eye out there in the lands of VIX or SVIX or UVIX or UVXY, sir? Put it all together.
I was surprised. I think that the SVIX trading was a little better, although you have to be patient. But it is trading okay. SVXY is trading okay, yeah, but you have to work your order a little bit, work into the hard side kind of, I should say, like, just be aware of, I should say, understanding if you're trying to fill the hard side, meaning like you're trying to buy a call and SVIX when the vol's going down, good luck. But the resting orders are not too bad relative to like a fair volatility. So just be mindful of that as long as you're going with the move in vol. So yeah, it's the paper I would say is picking up. I'm just parroting what you said here. I haven't seen any huge volatility, although I am interested, because we did highlight, what was it, 3 weeks ago, 4 weeks ago? And I don't know if it was on here or Options Oddities, but, like the 50 cent guy, but he wasn't really 50 cent. He was like a fake 50 cent guy buying some juice again. And I have to say, that straight up call purchase was timely. I have to go back and look at the show notes to see where he's, I'm saying whatever, is sitting, where they're sitting on those big call purchases. So, but the vol's definitely higher. So, but I do find that the timing of that to be suspiciously good.
Suspicious, yes.
Maybe he was looking at the same movie I was, but he was ahead of me buying those calls because they look pretty dire and dim for a while. So, by the way, I think that's having the vol move is going to increase the interest in those short vol products a lot. And I would caution everybody, a short vol product is helped cause the Volmageddon somewhat a few years ago. So even though they have tampered down and the AUM is nothing like it was back then, just be mindful. Be mindful of those products.
You can be surprised when I tell you on Oddities in a little bit what I got that SVIX fly for. You can be like, really? They filled you with that? So a little bit of a tease for Options Oddities coming up in a little bit, listeners. But now we got to keep on rolling into the most difficult, the most dangerous portion of the show. It is time for the crystal ball.
It's time to peer into the future and reveal what the volatility gods hold in store. It's time to look into the crystal ball.
All right, listeners, let's do it. Let's see what kind of evolution we had on the vol front since the beginning of the show. And at the top of the show, we had VIX cash a little bit shy of 25, about a 24.90, and it's pretty much exactly there right now, 24.95 as we're wrapping up the show. So not a heck of a lot of evolution there. VOLQ, pretty much the same deal, 25.75 when we kicked off the show, about 25.65 right now. Let's run down really quickly, see who had the winner chicken dinner out here for today. Looking at me first, because of course that's where people go. You know, they look at the crystal ball, they want the precise answers. They go to me first. And I was off about a little over a point, about a point and a third on VIX. I was 26.25, so I was a little bit higher. We obviously did kiss that multiple times this week, but no joy for me today. And 28.65 on VOLQ, so no joy there. The meatball doing his palindromic nonsense, no joy for him, 29.92. Again, we kind of kissed that this week as well. And 31.13 on VOLQ. I don't know how high I'll have to check and see how high we got in VOLQ. Did we get to a 31 handle? I'll have to check. Kevin, last week you were looking a little bit better. You were 24.25, so you were closer than I on VIX, and on VOLQ 27, so you're about a 0.35 or so away on VOLQ, so no joy there. And our buddy Vance Harwood from Six Figure Investing, 23 even on VIX, and VOLQ a 26, so he was a little closer on VOLQ, about 0.6 away, no joy on VIX. I'll look really quickly. I'll have to have our producers check in on all the listeners. We got a bunch of handles all over the place here for everybody. Our producers check in, make sure if any winners, let me know here as we go around the horn. Let's go out now. No winners last week. That means our guest gets to go first this week. Mr. Jim, you get the dubious honor, sir. What are you feeling for this time next week for VIX and VOLQ, sir?
Well, you know, it's funny because with all the shenanigans that have been going on, as you pointed out, VIX looks pretty flat from Friday to Friday. So why not be flat again? So let's go 24.85 for VIX. And I don't have a VOLQ number in front of me. We've got some kind of premium, but
it's at about 25 1/3 right now.
Oh, yeah. So, you know, let's just say 25.25.
Look at you keeping it all the same for this time next week. Mr. Kevin, same question for you, sir. What are you feeling for VIX and VOLQ next week?
And this makes for arguably bad radio, but I kind of agree that we may see vol or forward vol estimates bounce around these levels for another week. As your listeners likely know, we have a Fed meeting, and it'll be interesting to see if they can sort of thread the needle there. Let me say 24.5 on VIX, and I will say 26 on VOLQ.
Mr. Rocklops, you know what I'm going to ask you, sir. What are you feeling for this time next week, VIX and VOLQ, sir?
Wow. I think this is a hard one for me. I have to. I'm going to go. The Fed's coming out. I think they're gonna wimp out a little bit because they're going to claim victory on breaking stuff, and so I'm going to say 22.50, which could be horribly wrong because if it ain't 22.50, it's going to be 30. Is the problem? As far as VOLQ goes, I think VOLQ is going to stay right around this level. I don't think it goes a whole lot lower. So I'll tell you what, I'll say 25 VOLQ and I'll say 22 VIX, and that's hoping for things to get better, but I'm not quite sure it will.
As you were talking, Mr. Rock Lobster, I already wrote down my vol prognostication. I was at 22 3/4. I thought you were going to step all over me for a second there at 22 halves. You gave me a little bit of breathing room. That was nice of you. And I'm at 24.5. So I'm feeling maybe a little bit of a wind will come out of the sails after the Fed next week. But you're right. If it's not that, it's back up to 30 again. It's kind of a bit of a binary choice for this time next week. So that is your ball market, listeners. We have already run long, so we got to get out of here. Let's go back around the horn. Let's start with our guest, Mr. Jim. If folks want to check you out on the land of the Twitters, maybe check out your awesome 2022 year in review for Vol, where should they go? What should they do, sir?
Easiest way to track me down is on Twitter at VIXologist. And the direct message channel is open for anybody who wants a copy of the 2022 review I did.
Check it out, listeners. DM him if you haven't. Get that. It's fascinating analysis. You'll spend some time reading it, but trust me, it's time well spent. At VIXologist on Twitter is the place to go. And Mr. Kevin, where should they go if they want to check out all of your NASDAQ options content, sir?
I echo that Jim's Vol review is well worth the ask. And for those interested in the NASDAQ 100, there are tons of resources on NASDAQ's site. Big picture, I argue that this index is best reflective of the economy of the 21st century. And I'm excited to see continued growth in our index options product suite. Yesterday, we had the busiest day in months. Great to see, and thank you again for having us. Mark?
Fun times. You know where to go to check out all that fun, listeners, and much more. Just NASDAQ.com. Pretty easy to find, listeners. And last but not least, Mr. Rock Lobster, if folks want to check out all of your new and evolving Vol content and products, where should they go? What should they do?
Yes, it is a revolving. Yes, I have some product has moved over to Money Map Press. SpyMaster's now weekly profit cycles, teaching people how to use VIX and SPY in combination, being curve sensitive. You can check that out over there. But at optionpit.com, any of our goodies, ask for Ted or Andrew. We're still do the high touch education service that we've always been at Option Pit, and still growing probably faster than we can handle, but we're doing okay. So 888-TRADE-01, ask for Ted or Andrew. And remember, if you said I heard Andrew on this show, you get 10% off anything at Option Pit. You can't get a better deal for that. I mean, I don't get my pro box or nothing like that from Longo, but you are going to get 10% off at Option Pit. Just letting you know, you're
just gotta throw the shade in there before you get out for that. I understand. Gotta throw the umbrage out there. Check them out. Optionpit.com is the place to go. I'm seeing all the live listeners putting in their guesses for Vol. Looks like a lot of you are around where I'm hanging out now. 22. I see some 24 handles out there. Remember, if you're not listening live, get them in at options or questions at theoptioninsider.com is the place to go to submit your VIX and VOLQ guesses for this time next week. Get them in on show day. It's the only way to really be fair for everybody. You can't guess next Thursday for next Friday. That's no fun. So get them in. Of course, if you're within our 10th of a point margin of victory, you get to win fabulous prizes. It's pretty fun. Unfortunately, that music means that's the end of the show. It's also going to do it for all of you on the on-demand side. It's going to do it for your broadcast week. I want to thank all of you for joining us out there as we made sure, even though I was traveling around the country this week, make sure you got all your content in same bat time, same bat channel. If you don't want your broadcast week to end, and hey, who doesn't in these crazy markets, head on over to theoptionsinsider.com/pro. I'll be back with some very bitter guy called the Rock Lobster in a little bit to talk about all things unusual activity on Options Oddity. He's going to break down that SVIX fly and some other fun things I got off this week. So Options Oddity is the place to go to hear all that. Then we'll see you all back here on Monday for the Option Block all the way through to next Friday, another episode of Volatility Views. Stay safe out there, everybody.
Volatility Views is brought to you by NASDAQ. From its inception, NASDAQ has been an innovator and agent of change in the financial markets. It's in our DNA, from the development of electronic trading to our drive to bring enhanced functionality and world-leading technology to our suite of 6 options exchanges. We exemplify customer focus, consistent technology, and streamlined solutions. Now NASDAQ is proud to launch the NASDAQ 100 Volatility Index, ticker symbol VOLQ, to its suite of exchange indexes. VOLQ uses only at-the-money options to provide a precise measure of NASDAQ 100 volatility. Learn more about this exciting new volatility product at www.nasdaq.com/VOLQ. NASDAQ, leading the U.S. options market and continually rewriting tomorrow. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.